Hi everyone, welcome back to Be Rich. I'm fortunate enough to have Anand with me in Be Rich. As I was saying in the morning, that he was willing to join me today, and I didn't do the barter with him that I would appear on the page with him. So then he would join me on Be Rich. He had written a very interesting article which we were debating about before the camera started, which is the famous Buffett bet. Recently, a podcaster who's famed for interviewing many luminaries in the investing world called Seides, he had put out an article in the Financial Times about how he thinks envisions of a 2.0 version 2.0 of the same old bet, and he feels the odds are much stacked better on his proposed idea of the bet, that if you change certain things in the equation, that he'll definitely be able to outperform the S&P 500 over a 10-year period. So I thought let Anand lay it out what he read and what his arguments are. Then me and Anand can debate whether there's any water in this argument.
Ted Seides is the person who lost the first bet.
Yeah.
Now, he claims that it was an accident why he lost because the market went one side. Normally, the markets do not go one side, and if there had been volatility in the market, he would have won the bet. But there was no volatility in the market. They kept interest rates zero, and because interest rates were zero for a long period of time in that period, stocks took off, and it was a unidirectional rally, and there was no gravitational force pulling it down, and it was floating in space. That is why the S&P 500 did well, and Buffett himself gave him only a 60% chance of beating the index. So he says while Buffett won, the conditions were favorable
For Buffett.
for Buffett, and it is not an ideal situation. He himself acknowledges that Buffett didn't know that interest rates would be lower for so long period of time, and an large element of luck involved in what happened. This is a bit of very small portion of sour grapes in what he is saying. Buffett's argument has been and will always be that there was a large element of fees involved. And he also acknowledges that Buffett's own Berkshire Hathaway bet the index. And there was somewhere around the time when Buffett started to buy back his own stock for the first time. He thought that his stock was so undervalued that he started buying back his stock. And then he goes on to argue that today private equity funds are in a position to beat the index because PE funds use leverage. And because if there is 10 rupee fund, they can go 3 times, 4 times.
Correct.
So they can invest for 40 rupees and net of fees still can beat
The S&P 500.
S&P 500 over a 10-year period. This is what he believes. He also goes back, reminisces, and he talks about the current Treasury Secretary Scott Bessent, how he was his partner and attended several of his meeting with Buffett. And he also says Charlie Munger told him that he would lose his bet. Now, let us come back to private equity players.
2.0.
2.0. Now, in my opinion, he has got it wrong once again. And again, he'll blame Scotty Besant and Trump after 10 years, after the event is over. Because the reverse has happened now.
Yes.
What has happened is cost of money has shot up
Correct.
1 year back from 0 to 5. And all this while private equity could have done well because interest rates were so low.
We were getting free cash.
They were getting free cash and they were finding people who could invest into this free cash.
Correct. There was
And
no cost for
yeah,
investment.
and there were two things. So because you had zero cost, you could leverage many times over without any cost. And the second is since there was no gravitational pull on the price of stocks prices kept on floating forever. So it was a
Even trash was floating.
even trash was floating at high prices. So there were two in one advantage. Now what he fails to realize, three things he fails to realize, in my
Humble opinion.
opinion, which is not as powerful as his. One, there's a cost element. Buffett himself is sitting on treasury
Yes.
and collecting 4.5-5% interest.
Absolutely.
So any private equity which is going to gamble will at least get 6 to 7% cost of interest.
Correct.
So if you are going to borrow $4,000, you are going to pay 7% in annum on $4,000.
True.
So there's a cost of money involved. Second, because there's a cost of money involved, prices of stocks have not gone up. You leave the Magnificent Seven out.
Yes, if you remove them, you're absolutely right.
If you remove the Magnificent Seven, you will find the S&P 500 is not doing as well as it is supposed to
Previously
do. Why is it doing so badly? Is because gravitational forces pulling down the price of stocks, except the Magnificent Seven. So it's pulling down the price of stocks, and therefore there is a lot of price correction which is baked into the S&P 500 but is not visible to naked eye. If I take out Nvidia, Apple, Microsoft, the top 7, you will have a lot of problems. Okay, for me to be wrong, interest rates have to fall very fast and growth has to be good in America or globally. Unfortunately, the world is so structured. If America catches cold, the rest of the world will catch pneumonia today. So
That's why
now,
even the Indian IT stocks we are worried about.
yeah. So now what is going to happen is Trump is taking a wrecking ball into the American economy.
Yes.
There is a possibility of a strong and deep recession in America, which means the rest of the world will catch fever or
Yes.
cold or
We'll be in
pneumonia.
ICU.
So the startup world, which does not like the word profit, let's not confuse with Facebook, PayPal, and the first PayPal mafia crowd.
The first lot.
First lot.
Yeah.
Today's companies, Uber is profitable at what cost? Right? The cousins of Uber are not profitable. So today's stocks, startup stocks, for them to be profitable at nominal capital is extremely difficult. Now, if you look at Kraft Heinz,
Yes.
which is 3G Capital bought it with Buffett's help, merged it together and tried to turn it around, it failed miserably.
Yes.
Today, I read an article which says they want to break Kraft and Heinz into two companies.
Like what happened in Kellogg's.
Oh. So basically, the private equity got in, merged two companies. They thought they can run it fast, and relist it. It didn't happen. So private equity, what Ted Snides is not telling us is whether an equity market does well or not primarily depends on how the growth in the world is going to be and what is the cost of money. At this point of time, when tariff finally hits America, you are going to have high inflation, low consumer confidence, which means rates have to be elevated for some time to come. Therefore, people will get out of private capital faster than they got out of S&P 500. And I don't see how Musishan and his SoftBank is going to beat. He's talking about bet like SoftBank.
Correct.
SoftBank beating the S&P 500 over 10 years looks like a pipe dream to me. I think he's got it wrong again. Not because the theory is wrong. The underlying economic fundamentals are not supporting him.
Okay. So my basic, then can we say majority of this is just purely on luck. Like you rightly said, he did not expect interest rate to sit at zero for so long. It just happened. The world moved in that direction. He couldn't have foreseen it. Even Buffett didn't foresee it. So from here also, it's very difficult for him or anybody to say what will happen in the next 10 years and say this should be the course of action that will happen.
No, it's not, because the element is fees. Private equity charges 2 plus 20 or 3 plus 20. So whether you are doing badly or not, that 3% is going to be shaved off. So if I'm going to be doing badly, also 3% will get shaved off. And if I do well, 20% of the profits will also get shaved off.
Okay.
So heads I win, tails he loses the problem here. It's
Understood.
nothing to do with the economy,
Understood.
right?
Okay.
The fund manager gets paid whether he does well or not at the rate of 2 to 3% every year. And by chance you make profits, he's going to take away 20% of it.
Some more creamily.
Cream it.
Okay. So
Whereas if I put an S&P 500, I don't get to, I pay him
you don't have to pay anybody anything.
And something like Vanguard is a not-for-profit company. So the whatever fees or profits they make is going to come back to me.
True.
So it's free.
Okay.
So the advantage of 2 to 3% over a period of time and capping profits at 80% will make sure that these guys can never beat S&P 500. That time they didn't do badly because rates were zero. Now they will do badly because rates are too high.
Okay. Here I have the next argument, which would be, like you said, if you remove the Magnificent Seven, the S&P 500 is performing badly thanks to Trump and what he's doing, the shenanigans he's doing. So he's creating an artificial dam. So let's say he forces the new Fed chief to come in or something happens, he's able to lower interest rate to 1% where his dream is. if he is able to do that very rapidly, won't it burst the dam open again, send it skyrocketing? So if you enter ground floor, you're going to go to
No,
the
no.
moon.
The point is then everybody will sell dollar. Dollar is also a global currency.
True.
So no Fed chief will be able to keep interest rates low
Where it
forever.
is, yes. So I
Yes.
want people to realize that.
So it is all dependent on inflation.
Correct.
And already there are people running charts to show that the next congressional elections, which is there in November, Mr. Trump is projected to lose and lose badly.
Correct.
He has a majority of only 6 or 9 in Congress.
Yeah, these are won by wafer thin margins. And
Wafer
Musk,
thin
his
margins.
friend Musk is now out for revenge.
Yes. And 3 of the 50-50 seats he won, people have resigned.
True.
So there are about 30-40 seats going up for thing. So it's more likely that the Democrats will control the Congress in the next 2 years.
Then
Which will-
become a lame duck.
He will be a lame duck president.
Okay, last question. When we were talking about Heinz and the private equity venture capitalists and what they did, so the same thing is happening with Bain doing in Manappuram, no? Maybe would it be dangerous for Manappuram? If they take inside Manappuram, they break Manappuram into pieces.
No.
For take it from Nandakumar and what is a...
It's simple. There is nothing to break in Manappuram. Manappuram is a 60% gold loan company.
Correct.
At most, what he will do is there's a microfinance company, which is India's largest microfinance company. He'll spin it off and sell it to another microfinance company. Take the cash and give more gold loans.
So net, the investors stand to gain.
Again, it's only a purely an gold loan play for which Bain Capital has come.
Correct. So there you guys go. So this is the basic premise of the article, and Anand has very eloquently explained to us why even now it is very difficult to beat the S&P 500. I would like to know your opinion. I thought I picked some of the opinions you might have had, questions you might have had. I'm sure this was made you think of some more questions. Put them down below in the comments, and I'll ask Anand when I catch him. I did promise in the last video that I would review the comments from the previous video, but that I'll take it up tomorrow when I'm alone with you guys. Today I don't want to take Anand's time further, as he has other videos to get down to doing. Thanks for watching Bearish today. It was wonderful having all of you this evening, and nothing else more to say than say good evening.
Send this video to your friends and relatives and have them take a look. Kindly ask them to subscribe to our channel and turn on the bell notification. Thanks for the effort.
Thank you.